Today we're going to talk about two stocks, metamaterials stock, MMAT stock, and another entity that's referred to as MMTLP stock. It's probably one of the most looked up tickers right now, and that's because this entire situation is an absolute mess. Now, before we get into talking about metamaterials stock, I wanted to touch base on who we are. So our firm was founded several decades ago when GW signed the Nanotechnology Development Act. We became very excited about the potential of nanomaterials. I don't know if anybody remembers liquid metal and the deal that they were supposed to do with Apple that never transpired, but we became quite interested in various nanomaterials such as carbon nanotubes, dendrimers, and of course graphene, which everybody produced a whole lot of, but nothing seems to have come out of that in terms of meaningful commercialization. Now, over time, we evolved into covering emerging technologies across 11 different categories, and we're a team of experienced institutional investors with a focus on risk management. So that's my background. I worked for a decade in risk management at one of the leading firms on Wall Street, and I achieved a master's degree in investment management with a risk management focus. How we learned how to find red flags in stocks is really by the school of hard knocks. We had to go through the same pain points that everybody else did, the same growing pains when we found companies like these. Are some examples of the firms that we used to cover back in the day. Some of these names would be familiar to some of you. This was a portfolio of firms that everybody talked an awful lot about, and they were all thinking that wealth was right around the corner with these different miracle products, none of which had meaningful revenues or growing revenue streams. And you can see that if you invested $5,000 in these 6 companies, then 10 years later you'd have about 80 cents. So that's a return of $30,000 going all the way down to 80 cents, and you can do the math on what that looks like, but you wouldn't have fared very well, and we learned the difference between stories and meaningful traction. So our initial assessment of metamaterials, just right off the bat, it's under our $1 billion market cap cutoff at around $430 million market cap. They're just starting to realize meaningful revenues. We'll talk a little bit about that, which we describe as $10 million per annum or higher. However, a cursory look at this firm turns up more red flags than you'll see in Tiananmen Square. First off, on the right here, you can see that this company does a little bit of everything, and I would bet that there's some COVID in the mix there. But before we get into that, let's talk a little bit about the new generation of stock promoters. Now, if you want to see whether a stock is being manipulated by retail, quote-unquote, traders, go look for it on Twitter, and you'll come across firms like, when we wrote these statements here, this was probably late last year, or let's say late 2021, before the bear market started, but there were a lot of individuals promoting stocks, SPACs in particular, names like Rocket Lab or IonQ, and they put a little icon in their Twitter profile, and then these quote-unquote analysts start to pump and manipulate the share prices. And one of the individuals that we tangled with back then was this Mr. Zach Morris. So he didn't like our due diligence, which simply pointed out facts and tried to take us to task. And if you go and look on FinTwit, individuals like this are a dime a dozen, and they actually have the audacity to suggest that you can take $240 and become a big swinging dick trader with it. That's just not how the world of finance works. Well, these Pied Pipers were ranked based on the number of rats who followed them and encouraged their behaviors. And look at the name there, Mr. Zach Morris. Well, here's a document filed this was 2 weeks into December of last year, less than a month ago, and these are charges against a set of individuals described here, one being Mr. Zach Morris, and you can read this for yourself, but I think this statement here says it all. To their legions of followers on social media, the 8 defendants have for years promoted themselves as trustworthy stock-picking gurus. In reality, they are seasoned stock manipulators. That's exactly what we said was happening, and now they're going to be taken to task by the U.S. government. Now, from the horse's mouth. This is taken from that document. You can go look it up yourself. One of the firms that they were promoting and acknowledged in their chats with one another that they were promoting was this metamaterial firm, and this Hennessy gentleman claimed that he had discovered this merger was coming with a firm under the acronym TRCH, and they were going to merge with this metamaterials firm. And in particular, this statement here, you can read the falsities that are listed here, taken verbatim from the SEC's document, but this statement here we highlighted is very curious, including a dividend that TRCH shareholders would purportedly receive after the merger. We've seen plenty of this nonsense, buy 2 shares, get 1 free bullshit from firms that are trying to turn it into a lottery game when in fact investing is very serious business. So this individual talked about this dividend. Well, this dividend is MMTLP. So MMTLP stock is one of the most searched for tickers out there right now, and we understand why when we pulled up the prospectus. Highly unlikely anybody that's invested in this has ever done that. This prospectus for your worthless shares says this at the bottom. It's all you need to see. We've highlighted it in yellow. Accordingly, there is currently no public market for the common stock, and there is no current expectation for a public market to develop for common stock. That's exactly why we don't get involved in equity crowdfunding, is because if you don't have a market for the shares you hold, they are worthless, and they specifically tell you that here. Now, when you look at what NextBridge Hydrocarbons actually is, they say our primary focus has been the development of interests in oil and gas project we hold in the Oro Grande Basin in Texas. And then when you read Meta's SEC filing documents, here are 3 statements they make, taken verbatim again. The leases for their properties, the Oro Grande properties, include additional drilling requirements for certain years, 2022 and 2023, they state here, which may require us to raise additional capital. That's because for the first 9 months of this year, they spent $1.6 million on these whatever these projects happen to be. They're a result of their typical reverse merger from an oil or mining company. And that they talk about here how they intend to sell the leases last year in 2022 and transfer this ongoing obligation to the new owners or spin out the leases. In other words, they don't want to be saddled with that. And they say if this transfer is not completed in a timely manner, we may be forced to attempt to raise additional capital. Well, the spin out happened, baby. And shareholders of MMTLP now hold a private company that has liabilities. That's just lovely. And when you take a look, this is remarkable. You take a look out there at all the individuals that are following this stock, and the complexity that they've gotten themselves into is just insane. And the myths they believe about how they're somehow sticking it to the man. And I took this little chat from Fidelity and one of these individuals, and it's just hilarious to read through because you can see the Fidelity customer support agent trying to tell them this is an untradeable security. It is currently a private company, and as such is not something that can be traded. Is currently not something that can be traded. They're telling them that over and over, and these individuals are just clearly missing the point that whatever they have is essentially nothing. You can transfer it amongst transfer agents as much as you want, but all you have are paper shares that are worthless unless there's a market that they can be traded on. You have individuals like this lady dressed up as a pigeon talking about God knows what, but this just goes to show what an absolute shit show of a mess Metamaterials has become. Now, of course, you need to differentiate between Metamaterials, the company, and this spinoff. So let's forget about the spinoff. Let's pretend that just never happened. And let's look at what people are asking about Metamaterials stock, just taken from Google here. Is stock a good buy? No, it isn't. We'll show you why. Is Metamaterials a good company? Well, we just talked about some of the malarkey that's going on, so probably not. What is MMTLP? Well, it's worthless. Is MMAT a buy, sell, or hold? It's a do nothing. Just walk away as fast as you can. Talk about what will the dividend be? Is it shorted? Most likely. Is it profitable? No. Are they working with Facebook? Who knows? They could be working with anybody. We go to look for answers to the sorts of questions being asked to the horse's mouth. This is Edgar. It's where probably a lot of people that are holding shares in this company have never been, but you can go look up a firm and see all the documents they file with the SEC. And we took their latest 10Q and had a peek at revenue. So check this out. For the first 3 months, or the 3 months ended September 30th of this year, they brought in product sales of $432,000. That's absolute peanuts. But they also had some contract revenue that really makes their revenues look a lot better than they actually are if you're focused on product. Well, where did those come from? They say we currently derive a significant portion of our revenue from contract services with a G10 central bank. Well, what do you know? It's a firm that we came across 8 years ago that's called nanotech, and they developed this technology for banknotes or whatnot, and they had this development contract for up to $41.5 million over a period of up to 5 years. And when they were acquired by Metamaterial, then they inherited that revenue stream. What you should also take note of on the books is the $279 million in goodwill that Metamaterial has on their book. That large goodwill amount is typically from when a firm overpays when they're making an acquisition. But that's beside the point. Where they sit now is they have $32 million in cash on $22 million losses last quarter, so they have a couple quarters left before they need to raise money. So let's talk about valuing Metamaterials stock. We use what's called a simple valuation ratio. That's market cap divided by annualized revenues, and we've calculated that here for Metamaterials. It's 42. Well, we also have a catalog of 460 tech stocks that we cover, and in that catalog, we've calculated the same value for a large set of disruptive tech stocks. The catalog average is 7. So if shares of Metamaterials stock were trading at that average, which we believe they should be, it would be trading at about 19 cents. Problem is that if they trade under $1, they're going to run into some issues and be demoted to the over-the-counter exchange. Not a big deal from a shareholder perspective, because you'll still have liquidity and you can still trade your shares, but certainly a lot of firms won't touch, institutional investors won't touch over-the-counter junk. It's just not something that they pay any attention to. And then, of course, don't forget about dilution. You can calculate this yourselves and just go into that 10Q or any sort of SEC filing document. Here you can see at the beginning of last year how they had 240 million shares outstanding, and then you can see where they issue stock and whatnot. That's to keep the company going, and of course they issue some there for some acquisitions, and the balance jumps to 360 million. You'll watch that balance grow over time quite quickly, because firms like this need to raise money. Now, the other thing that we look at with companies like this in great detail is to see if the management team has any broken promises. Now, after seeing that promotion bit and all the red flags that we came across initially with this firm, I seriously don't want to commit our resources anymore into looking at such a steaming pile of dung. But if you wanted to dig into what management's actually doing, this short report from Kerrisdale Capital talks about broken promises. Now, you can go ahead and look for the filings yourself and validate everything that they talk about there. You need to take it with a grain of salt, because short firms are incented to talk smack about companies that they're short. So they say here, we don't believe Meta's worth any more than the cash on its books, 25 cents a share. They ascribe a little bit higher valuation than we do, and they say there's a good chance the company will squander even that. Well, their last statement here talks about this thin film being a fitting metaphor for the company and their flimsy veneer of aggressive promotion. Well, there were certainly promotion elements going on there. Remember that statement we highlighted in red, the fact that these individuals promoting said there would be a dividend, and then there was a dividend. That seems odd. Did they have insider information? Was that communicated to them directly? So there are a lot of unanswered questions here. We don't get involved in anything like this. We stay far, far away from it. But if you were so inclined, you might open up this report. Again, take it with a grain of salt and see what they had to say. Now, you may wonder who's actually making all the money here, and that's individuals like this. So this gentleman here is grinning like a Cheshire cat because he's pretty much printing money. So Citadel posted a record $35 billion in revenue across trading and market making in 2022. That's insane. And the hedge fund, it says, most incredible thing is that the hedge fund made $28 billion from just $54 billion in assets under management. Market making, as long as people are trading, they don't care what side of the trade you're on, they're making money. So this boom of meme stocks, and there are a lot of meme stock elements here with Metamaterials as well. This boom has just made hedge funds a lot more wealthy. And we see a lot of banter where people think they're sticking it to the man with companies like that. No, you're not. This guy is taking you to task. So we can learn from the past. Stocks that have been manipulated should be avoided like the plague, regardless of whether or not the management teams are involved or supporting that or perhaps friendly to that. There are far too many great companies out there to consider right now. And in our mind, the typical profile of a MMAT stock investor would be someone with all their eggs in one basket. They're either playing with a quote-unquote large sum relative to their net worth, several $1,000s, or playing with peanuts. Maybe they have $500 and they have this attitude, it's okay if I lose it all. Well, this is sort of a newbie behavior, and it's from people who don't distinguish investing from speculating. You want to speculate, go to a casino. Well, these big fish that we talked about that are now in trouble with the SEC, they have a lot of little fish swimming around them, so we wouldn't be surprised at all to see some of them coming around and providing further evidence of the promotion by accusing us of various things. We get this all the time in past stocks that we cover, and that's just another red flag. Now, for those who are genuinely invested and believe in this company, leave you with a couple sentences here from Carl Sagan. He says, "The bamboozle has captured us. It's simply too painful to acknowledge, even to ourselves, that we've been taken. Once you give a charlatan power over you, you almost never can get it back." So you need to recognize what's happening. And here's a Reddit cheerleader who says, "I believe," he's talking about the short report, "this is the smoking gun pointing to shorts attempting to bankrupt the company before it can start disrupting." Okay, mate. That's the sort of language that you need to pay attention to. And a lot of people out there are what we call unconsciously incompetent. They're unaware they're being duped. You need to recognize the red flags so you can become consciously incompetent, aware of the problems. Then you can move towards becoming consciously competent as an investor, and eventually it starts to become more intuitive. That comes with experience. So congratulations on taking the first step that we've all taken. So inevitably, people will come around accusing us of things like being short the stock. We're not. We never short stocks. We weren't paid to write this piece or publish this video. We're not in cahoots with their competition. We're not assuming everyone is dumb. We're not bashing the company to get shares on the cheap. Any other baseless conspiracy theory that you're proposing, those are all false as well. We're stepping in to educate investors who are making big mistakes and tell them this is not what investing is about. And we've put together a lot of research around this, one being penny stock warning flags. And if you want, you can pause the video here and take a screenshot of this and read it later. I'll put a link to the article in the description of this video that talks about analyzing penny stocks, or any stock for that matter. But this is something that's quite valuable. So just to conclude, don't be unconsciously incompetent. Walk away from this junk. When stocks throw off more red flags than Kim Jong-un's birthday party celebration, you head for the exits. Stock price volatility, you'll see this thing jumping around, that's noise. The underlying company is not credible and does not seem compelling in any way, shape, or form. And you can use this opportunity as a learning experience, and now you can start to properly invest and secure your future. So please go ahead and click this blue Nanalyze icon on the right. I've put up a video here on the left for investing for beginners that you may find of interest. Thanks for taking the time to watch this today.